You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Hope you guys are enjoying the slew of content we've been sending your way from not just from the SWAN conference, but from the OIC conference all of last week. And now, of course, on the trading show here in Chicago, we've been delving into all sorts of fun areas, all sorts of fun asset classes, including crypto, which brings me to our next guest. He's a newcomer to the program and indeed to the network. He is Rosario Ingargiola. I love that name. It rolls off the tongue. He is the CEO over there at OTCXN. Rosario, welcome to the program.
Thanks, Mark. Thanks for having me on.
CEO, OTCXN, a lot of acronyms flying our way. So why don't we start, as we are wont to do, with all of our first-timers on the network. Go ahead, give us a little bit of an overview of your background in the financial space, as well as what the heck you guys do over there at OTCXN.
Yeah, absolutely. Happy to do that. So basically, I've been building institutional electronic trading platform companies as a serial entrepreneur for about 17 years. Started my first company with a comp sci professor, University of California. Made it possible for big firms like Millennium Partners and BNY Mellon to build arbitrarily complex algorithmic trading strategies with a big focus on machine learning and AI without having to write a lot of code. After that, I built a company that was acquired by an investment bank in New York, built the whole FX exchange stack. So we basically built everything from front-end user interface all the way through the OMS, EMS, matching, liquidity aggregation, smart routing, tick database, post-trade, the whole 9 yards. Licensed that to big firms like Cantor Fitzgerald and EDF Mann and others to basically run EFX businesses. Exited that, and in about 2015 started learning about crypto and blockchain and founded OTCXN, which is basically a capital markets trading infrastructure company and blockchain technology company. Very specifically, our core value proposition is the elimination of trading counterparty and settlement risk. Focused initially in the cryptocurrency, digital asset space, and also the spot FX space. We basically have a pure technology solution that is based around a multi-custodial blockchain ledger network where clients can hold their assets, dollars, crypto assets, digital securities in wallets and accounts at their custodian of their choice that's on our network, these regulated entities that we partner with. And we then give the solution to the custodian so they can tokenize those assets onto a custodial blockchain ledger, and then those provable assets are incorporated into real-time pre-trade risk for the different trading venues that we run on top of that common core infrastructure. And so that makes it possible for people to trade without having to worry about whether or not they're going to settle on the other side from a counterparty point of view.
Obviously a huge issue in the crypto space. You know, I like whenever I bring someone new on the network from the crypto side, I always like to explore. Everyone has a different eureka moment, the moment that they got lured to the dark side, I like to say, of what brought them into crypto. You say for you it was around 2015. What was that genesis moment that made you say, hey, this Bitcoin or whatever it was that lured you in, these things are kind of interesting, there's something here. What was that moment for you?
Yeah, that's a good question. It was actually pretty interesting. So I'm based in the Bay Area in San Francisco. And all these exchanges were popping up left and right all around me. And that really got me wondering, because I had run my first two companies from the Bay Area, but I had never actually been able to hire any engineering talent there that knew anything about the domain, right? So I thought to myself, these exchanges must be not so great. So I thought there might be an opportunity to come in and put together an institutional exchange that aggregates all of them. And I was learning about blockchain at the same time, and the reality is I realized you couldn't actually aggregate them because there's no prime brokerage in the cryptocurrency space, and so there's no way to clear and settle the business when you do that aggregation. And so that with my understanding of blockchain that I then had from all my study in that area, I had this aha moment where I realized you could actually use blockchain and a collection of other technologies to essentially deliver a synthetic prime brokerage that would allow you to clear and settle this business without being a trusted party and without being a counterparty to the trades. And so that was what we pursued, and that's what we built.
You know, it's interesting. You're going right after kind of the counterparty / custody issue. Whenever I've had a lot of guests on, talking about different aspects of the crypto space lately, and whenever you kind of bring up custody, they get a little nervous. A lot of them say, "Oh God, we don't want to touch that," or that. It seems like that's like the third rail. That's the lightning part of crypto. So on the flip side, for a firm like yours, it's also an opportunity. Obviously, everyone's running scared from it. Maybe that's a place you might want to look. So I'm curious, what was it? Did you just saw the opportunity? Said, well, people don't want to deal with this. We want to dive in there. What made you think this was a challenge you guys wanted to tackle?
I think it was really, the realizing that we could also use that synthetic prime brokerage even in the spot FX space. So there's a huge prime brokerage problem there as well. In fact, after the Swiss National Bank event in 2015, basically many of the tier one banks that were offering the service actually got out of the business. Balance sheet requirements went up to $100 million. It suddenly took 2 years to get a prime brokerage agreement. So even there was a real dearth of the availability of prime brokerage. Almost nobody could get access to it. And so then there's a complete, in the crypto space, there's literally nothing comparable to prime brokerage unless you consider some of the guys that are holding, there's agency desks that will hold your assets and sort of manage access to liquidity for you, but they don't have the balance sheet to absorb any losses. So it's really not prime brokerage. So really realizing that it was applicable both in crypto and in traditional markets really got me kind of excited. And it was took about 4 years to build out the infrastructure stack before we actually were able to get live, actually.
And it is live now then, so people can use it for themselves. You have customers out there kicking the tires and lighting the fires, as they say.
Yeah, absolutely. So we went meaningfully live around March 1. And it's interesting, we have two sides to our platform. There's an OTC block trading marketplace, which is request for quote platform where the trades, when you trade dollars for Bitcoin, clears and settles instantly against those provable assets at the custodian, and you have immediate retradability of the crypto assets without waiting for any public ledger transactions or confirms. And then we also have our ECN, which is a lit central limit order book, as well as a dark pool, and also kind of a hybrid. It's also aggregating streaming executable quotes from all the big market makers and other retail and institutional exchanges. And all of that liquidity is tradable and actionable with a single collateral account at any custodian on our network.
Auspicious timing to come in March. You said March 1st or end of March, because the worm turned shortly thereafter. So I guess sometimes it's better to be lucky than smart, right? When it comes to that, how is that? What's the upturn in the last couple of months? What's that done for your business? Have you seen an increased amount of enthusiasm and interest in the core product and in your services as a result of? I think we just hit 6,000 again today. So has that turning of the worm has that helped the business?
I think it's definitely putting smiles on people's faces. I'm not sure. It's interesting because actually crypto winter, I think for a lot of people actually brought to light the how much they really ought to be how much attention they ought to be paying to things like risk, right? So if you really look at sort of the intraday risks that people are still taking today, it's kind of shocking. It wouldn't fly in any other asset class. And so I think just the crypto winter actually helped our business and made people sort of think more acutely about that. And I think the price going in the right direction certainly can help. I think it sort of rekindles some of the institutional interest. But we've got over 45 institutional clients signed on the platform, and there's been it's been steady progress. I think you shook out a lot of guys that were maybe not here for the long term, but most of the folks that we deal with are sort of serious players that are in it for the long term.
I have heard that a lot. That the crypto winter, which is one of my favorite terms, I think probably Game of Thrones inspired, but nonetheless it's a good one. That it did shake out. You're right, shook out some of the people who were kind of just here for the quick money, and there are people who are seriously invested invested in improving the infrastructure and in the core asset that those people are still around today. But you kind of mentioned institutional interest. I want to kind of pick your brain on that a little bit, because that's the thing we've heard interesting and kind of somewhat conflicting things about over the last year. Obviously back end of 2017, everyone and their mother wanted to get into crypto, right? It was racing towards 20,000. Every big bank, every firm, they were staffing it, they were going for it. 6, 8, 10 months later, when we were kind of knee deep in the downturn there, and it seemed like every day there was a new negative bearish headline hitting. We broke through another support level here. Walk us through what that was like for you guys. You're out there obviously building the platform, maybe raising money in that time. How challenging was that for you guys during that period? Obviously the upswing now has been nice, but it hasn't always been that way. And then also, what were you hearing from the institutional desks in that period? Were they still interested? Were they walking away? What were you hearing from those guys?
Yeah, no, I think the interest has never really waned. I mean, it's a complex story, and now there's a lot of noise in the space in terms of people that are saying they're prime broker solutions, even though they're not. They have no balance sheet. They can't absorb client losses. There's all sorts of people saying they do aggregation, but it's not actionable. Either they hold your money and they're your counterparty, or they're just literally connecting all the APIs, and none of it is actually tradable in the aggregate. But I think the real institutional players, their interest has never really waned. I mean, we do demos. They usually go right to platform agreement and legal review and introduction to the custodians. So then they go open those accounts. I think that one of the things that maybe was really a turning point is when custody solutions got a little more mature and a little more trusted. Because I think that initially the biggest problem in the space was probably custody, but really in our view it's kind of a solved problem. There's people with really good technologies now. There are regulated entities. There are big names now coming into the space, Fidelity and many others that we're working with. So, that's kind of behind us. Now I think the biggest problem in the space is the absence of prime brokerage and trading counterparty and settlement risk, which speaks right to the heart of what we do.
That's where you guys live. So you guys are working with the new Fidelity platform that's coming out in a couple of weeks?
Yeah, we're trying to. I mean, those guys are super busy and very focused on a number of their own initiatives, but we're having good conversations and hope we can onboard them. As well as a whole bunch of others.
One thing I've heard this description of the institutional interest in crypto. I'd be curious to see if you agree. That people have been telling me that the institutions they say one thing about crypto, maybe they say negative things in the press, but behind the scenes they're doing quite the opposite. They're staffing up and getting ready for it. Have you seen that as well? A little bit of talking out of both sides of their mouth when it comes to the crypto side?
Yeah, definitely, and it depends on the kind of firm, right? So when we talk about institutional, we really are referring to people who are fiduciaries. Prop shops are also institutional, but they have their own money. They do whatever they want. There are folks out there that are running client assets that publicly cannot be involved in digital assets. And we have one client on our platform that's a public company, for example, that doesn't acknowledge that publicly. And they're, some of them are actually trading proprietary assets as they learn about the space, as they build up the desk, as they figure out how they want to approach the asset class. Fortunately, the market cap and just the reality of digital securities going forward is too big for anybody probably to ignore. So I think, some of them are waiting for different things to drop, whether those are regulatory clarifications or Fidelity to be fully live and online as the only custodian they would trust, relative to the other ones that are regulated. They all have their reasons, but the reality is, and from our point of view, they're all thinking about it, and many of them are working on it very actively.
Well, we're hearing the sounds of the trading show being taken down behind us in the background, but we are here at the Trading Show Chicago this week. What is it that brings you to Chicago to the show? Is it, you mentioned you kind of just launched in March, you kind of just getting the word out, you showing the flag a bit? Did you have some announcements? Obviously, talking to me is fun, but what brings you here to the conference this week?
Yeah, absolutely. So we've actually never sponsored the Trading Show before, but we thought this was particularly interesting this time around because it had a really big focus on the crypto space. And we do have a lot of clients here in Chicago, so a lot of the big prop shops, as people know, the guys that are sort of the what I call the real market makers that actually take market risk are here, and so it's always nice to come in and see those folks and hopefully meet some new ones as well. And so we're just doing the rounds and really enjoyed the show. It was really well done.
It is fascinating to see how quickly Chicago became effectively the crypto trading mecca. It seems like there was a lot of, let's say, latent trading infrastructure that was kind of laying fallow here. There's no secret. The exchanges have kind of been dwindling a bit. There's a deep pool of experienced derivatives traders here in Chicago. They were kind of just waiting for the next shoe to drop, right? Waiting for the next thing to come along. long. And then, in the last year or two, crypto has kind of just landed in that community with a bomb. And I've been amazed to see how quickly Chicago has taken to it and kind of bringing real expertise to bear, real risk management to bear, kind of all the things you mentioned. If you told me a couple of years ago, Chicago's going to become a crypto trading mecca, I would have probably laughed at you. So no, that probably will be somewhere in some tech bastion or somewhere else like that. But it's funny have you been surprised to see how quickly it's been absorbed into this community here? Well,
I hadn't really thought about it until just now, but it goes back to my comment earlier. I suppose one of the reasons why it is so prolific here and there are so many players here, including some of the big boys, is because it's basically a prop trading community.
It's a trading town.
These guys can do what they want with their proprietary capital, right? Most of them are not fiduciaries. So that's maybe why you see such a massive concentration and early adoption here amongst the big players.
And obviously, you're based in San Fran. You've had a couple of startups out there, so you live in and around that San Fran VC bubble out there. What's it been like? We talked about institutions, but what's it like out there from a crypto interest perspective? Did it kind of wane for a while there? Were there VCs kind of moving on to this was a bubble, we're moving on to the next thing? Were they kind of committed for the long haul? And again, maybe has the recent upturn, has that changed any minds out there?
No, I think actually, everybody gives pause, right, when you have that kind of decline in price of the underlying assets. But San Francisco, the Bay Area is a pretty unusual place in that it is incredibly prolific. Everywhere you go, every coffee shop, all the time, people are talking about crypto left and right.
You can buy your coffee in crypto.
It's pretty mind blowing. So I don't think so. I think there's there's a lot of the funds that are investing not only in tokens but also sort of hybrid funds where they're also doing VC. Look at Andreessen Horowitz. Look at just some of the the leaders in VC are actually increasing their stakes in backing crypto companies. And so I'm happy to be sort of out there in that community and feel sort of lucky to be immersed in that.
Are you guys raising money right now, or are you past that? Or
we're actually raising money. So we're doing a convert right now that basically takes us into our C round. So we did a B round. I guess about 14 months ago. Had great investors, all institutional. So far, we've had no venture capital investment, but we've raised a couple $1 million under the current convertible note round. Looking to do a Series C that would close sort of right around the end of maybe Q3. It's going well. Got some really great names coming in.
So I'm sure the recent upturn in the market probably hasn't hurt you're out there shaking your cup to different people. They sound like they're even more interested maybe as a result of what you guys are doing. Well, this has been a great chance to kind of catch up and learn about what you guys are doing over there at OTCXN. But before we go, Rosario, we'd like to leave the audience wanting a little bit more, right? We want to give them a little bit of a hint, a little bit of a tease. So if you got anything up your sleeve there, you want to leave our audience with what they can look forward to coming down the pike from you guys in the coming months. Now is the time, sir. The floor is yours.
Yeah, no, appreciate that. We have some really interesting things on our roadmap. Actually, we're getting ready to roll out an inter-custodian net settlement capability, which will make it possible to make custodians that are part of our network able to net settle en masse on behalf of all of their clients periodically. So we're pretty excited about that. We're also excited about a whole repo financing and lending capability that we're getting ready to roll out sort of midsummer, where people will be able to actually borrow Bitcoin to go short or do intraday financing around their trading positions, but do that programmatically and elastically on demand intraday as long as they have assets somewhere on network. So we're super excited about those things, and if you're interested in learning more, happy to talk.
And if they are interested in learning more, where should they go? What should they do?
Best thing to do is probably go to our website, OTCXN.com, and look us up there, and we'll be happy to get you onto a demo and a discussion.
Well, Rosario, thanks for giving us an overview of what you guys do, and we'll look forward to seeing how all this plays out in the marketplace in the coming months.
All right, Mark. Thanks so much.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.